Good morning, everyone. Welcome to the Eurotrade. I'm your host, Marcus Stalker D. And we're going to have a look at the levels and also do a recap of my Asia trades because it was short and sweet last night. And since it's Thursday, I'm going to start sort of sizing down a bit and staying reasonably selected as we head into selective as we head into Friday. All right, so one thing that I noticed yesterday, because obviously I did 3 metals all short. Why short? Because I noticed something in the implied volatility in the options. So anytime we had rallies, big moves, the implied volatility kept rising, especially on silver. But then, over the last 2 days, it stopped rising. So I was like, are we due a pullback? And then I was looking for signs to see whether we can maybe get a bit of a shakeout to the opposite side. And we got it. We got it last night. So one of the things that I noticed, I was using gold for general open sentiment for the rest of the metals. And actually, it's probably better if I show you on this chart, I think. So I know we're supposed to be on TopstepX, but I can't draw endlessly. So here is the Tokyo Open on gold. So what are we looking at? Obviously you have my ADRs and all that. However, here is the value area from the previous day. So not the developing one, but the one from yesterday, Tokyo. Gold, for the first time in forever, opened below value. And the first thing that it did is to reverse it. I did wait a little bit because I don't like to trade before at least the first hour of the exchange is over. And then we get the Shanghai pre-market and then Shanghai opens and everything goes nuts. You can see that here. So you can see me putting the marker on the chart below value acceptance, or val reversal. So sometimes when you open just under value, that can be a change in sentiment. So if they then reject the value low, even after like testing a little bit higher, that is actually a really good short. Another important point was that we did tag 46.25 and then went under. That was my area of interest yesterday. And then struggled. We just couldn't get back up there. So I was like, okay, value low, we're not really down. And then I had the orientation point at 4600 as a gamma flip area where gamma conditions would change back to negative on gold in particular. So I was looking for signs whether they're going to go short. I looked at the tape. I saw them plowing in. I entered, but I didn't know which one was going to move the best. So I partialed my maximum 3 default risk across GC, silver, and copper. And obviously silver moved crazily. I got a decent move here. You can see I went in 46.17.7, got out at 46.08. So volatility did its thing. They pushed it down. I grabbed my profits just above the respected gamma flips in all of these, with the only exception of copper that didn't really move that much. Like I grabbed a few ticks, I think it was like 18 or 20 ticks, and it carried on moving down. Both of them did, and they tagged my levels of interest. But I wasn't in completely. I was just like slightly above it. Why? Because I wanted to go to sleep, man. I just moved. I was like, you know what? I'm up 2.4K. I need some sleep. So I decided to go to bed around 2 a.m. rather than 3:34, which has been the case the last few nights. the last couple of weeks, and catch up on some sleep. So that was nice. And now we have similar levels, right? So let me just get rid of these so they're not cluttering up the chart. So similar outlook, but to the opposite side. We have massively increased volatility again on this drop, which does mean that it was a surprise to some. It wasn't a surprise to me, but it was a surprise to some. So Xian says gold has been barcoding the past 3 hours. That's not unusual for this time of the day. You will see some more movement as we head into midday London time. So again, London this time of the day, a little bit quiet. A little bit quiet. London open can be interesting for gold, but then literally as soon as the first half an hour is done, just dies a death on most days. Of course, there will be an odd day where it's like, wow, we're moving. But, you know, barcoding is the expected statistical probability for this time of day. It's almost like an out of hours time of day for metals. Do you like my little dog cup? Look at that. Can you see that? Hold on. What's going on? It's got a doggo on it. Oh, that's cute. So I'm drinking my espresso from a doggy cup. Captain Knuckles says maybe the IV is low because of the tariff verdict. IV is not low, mate. I'm just going to say that. So normal implied volatility for silver is about 40 to 45%. It was 68 and, you know, it kept rising. So 62, 63, 65, 68. Today, silver volatility has gone up to 76%. But what I saw was that for the 2 days that I was, because I have an IV tracker that I ping every day, so it was not rising for 2 days. It stayed the same at 68%. So that usually precedes some sort of a pullback move. And that's one of the things that I track. So once I saw that, I was like, I don't think I'm going to be long right now. And then gold opened below value, and I was like, it's worth a shot. Like if I lost all three, that would have been about 1.5k down, maybe 1.7k down on the day, and that would have been it, right? So as it turned out, I was right this time, and so yeah, live to trade another day, yeah. And now what am I looking at? Am I looking at anything? I'm not necessarily going to trade the rest of the day, but maybe I still have another XFA. I'll lock myself out of this one for the next 2 hours, because obviously I want to make sure that I'm fully awake, rested, and I also have a doctor's appointment later on, so I have to sort that out first. And I just don't want to go into seeing the doctor looking more stressed than I need to be. So I do have a 50k XFA that I can use just in case I see something, but the 50k XFA has to be micros and no silver, because it's too small of an account for that, just for now, until I build up some more balance in there. But there is that option. So whether I trade it or not, we'll see. So the pullback that we've seen basically added more volatility, which means it wasn't expected. So what do we have levels-wise? ADR low was exceeded and reclaimed on silver. Now, that's not the case with gold. Gold has been muted, and out of all of these, implied volatility in gold has been muted since last week. So it's the only metal where it's not really going crazy. So it's actually coming back to some sanity, and the stops that I've been using on gold are about 55 ticks. There was a time when a 35 tick stop was plenty on gold. We do not live in those times at the moment. Whether that comes back at some point, I don't know, but we're still looking at about 700 650 ticks average range on the day, and that's, you know, it's pretty nice. So a safe stop would probably be around 100 ticks on gold. So I know it sounds terrible, but we have to scale the stops to whatever volatility we're working with. And I mean, you can kind of see on this ATR, I have it on 9 because I want to make sure, because I'm using a 30-minute time frame for this particular purpose. So I want it to be a little bit quicker rather than looking at 14 periods. That's going to catch a lot of the Asia. So I want it a little bit weighted towards the final few days. Few periods, and even that is saying 113. And if we go according to Coach Paul to use twice the amount of ATR on a 5-minute chart, but that needs to then be increased to 14. What does that say? It says 36 times 2, so about 72 ticks even when we look at that measure. So it's still a range, but at least it's not 271, 320 ticks that we had a mere couple of weeks ago. So that's changed, and we need to go and adjust the stops. So if you've been using humongously massive stops on gold, trying to trade it through micros and using like 300 ticks on one micro, I think that is for now not necessary. Silver is still massive. So silver still has nearly 1,000 ticks of range, insanity, and that's going to get bigger because now we have even more volatility today. So if we see an upside movement, and we might, we could reach, like we could easily reach 95, but I actually don't see it as an impossibility to reach 100. If we do go into, you know, extended movement on the account of increased volatility, that is on the cards, and there are some strikes up there, believe it or not. So the thing that I really love about implied volatility and my ADRs is that they're not necessarily connected to the previous historical price action. They live independently of that. So you don't even need anything up at all-time highs to go, oh, I wonder where the next interest point is. Well, we know, because you look at the options and it's like, where are the strikes? Where's open interest? There's one at 95, but there's a bigger one at 100. So, and is it inside the day's range? Well, we went down to exhaust the ADR low. So now we have a statistical range to the opposite side, somewhere around 93, but it is very feasible that they, 95, it is very feasible that they overshoot that and then just keep going. But it's also feasible that they stop there and then they do a mean reversion, because above 90, same points remain, right? So above 90, we're positive gamma. Below 90, it's negative gamma. It's not quite that simplistic, because sometimes you can have an entire zone where like gamma is getting close to 0, and then the flip can happen anywhere within like 100 tick zone, and that also changes intraday depending on where the open interest is and how the option flows are happening as the dealers are hedging intraday. But yeah, the same levels remain. So we have 4,600 as a gamma flip area on gold, we have 90 as a gamma flip area on silver, and we have 6 evens as a gamma flip on copper. The only one that's under the gamma flip at the moment is copper. So copper is currently potentially negative gamma. So I see copper maybe going into a bit of a short or something, and we've had smash into all-time high, and now we're reversing. It is entirely possible that they smash it down tomorrow, maybe, and then we find ourselves into a bit of a distribution, bit of a breather, as we had towards the second part of January. But hey, it's been a very fun start to the year in the metals. So yeah, be careful if we crawl back above 6. The moves will probably be smoother. It's not going to be insane. Silver at 78% volatility, any move is going to look insane. So, you know, that's not really much of a... but the levels, right? So let's have a look at some levels. If we go lower, so let's say they just smash through the 90 again. Why is this out of alignment? That's bothering me, like visually. I do not like. So labels. What? That's not what I wanted. So is this why? Yeah, that's why. Okay. And let's get rid of the high and low price labels. Okay. Phew, that's better. Christ, I was like, that's not 90. Where is it? I'm so bothered. It's like an eyesore. Like I'm looking at 90 over here. I'm like, what? Okay, so if we go below 90, we actually have a very good chance of reaching 85. 85 should act as a bit of a stabilizer because there's a lot of open interest there. But if it doesn't hold, let's say we fall another 1,000 ticks or something, we actually have a good chance of reaching 82 as well. And even 80, but it's probably not going to happen today. Well, actually it might, because, you know, if you look at the range, it's not out of the, you know. So be very careful of that negative gamma amplification effect if we do end up below 90, and especially if gold starts dipping below 4,600, because that is the benchmark. So if gold cannot hold above 4,600, silver won't either, and then we're in for a bit of a ride to the downside. Now, to play the devil's advocate and to say that we are might going even higher, look for, again, 4,600 to hold as a positive gamma, and then expect more of a zombie-ish rally. However, there are some levels on the way. Yeah, so 95 evens, smaller resistance, but still decent. So let's have a look at some of the others. Yeah, 92 was a former area of interest, right? Because we went up there, but right now all the open interest is diminished from there. So yeah, next one is 95, and then we have the big boy, 100. There is a chance for the first or second standard distribution to also play out. The first standard distribution is slightly above the ADR high, so 93.70. Second standard distribution is 98, so that could be something. And then we have 85.14 as the standard distribution to the downside, and then 80. So it all kind of matches up with the options chain as well. We have some zones of interest, zone of interest, ZOI, and yeah, but 90 remains the line in the sand, so to speak. Be mindful of the structure. We now have Asia low and Asia high, so 90 is actually middle of the range. So don't use it. I don't think it would be a very good trade location, because we either need to go higher or maybe get like some sort of a reference of the initial balance to have some TPOs that we can lean on. Lean on me when you feel. Michael Bolton. I don't know the lyrics to that, by the way. I just know lean on me. Or was it first Bill Withers, was it? It was a Bill Withers song. Where can I learn to trade like you? You have free material. So my Market Stalker's Pro Development course is not free. Why? Because this is my intellectual property. I've done a lot of hard work to get to, we've done research, development, tweaking, lots of algorithms, threw away a lot of them, kept what worked. And then over time, over the last 20 years, me and my team have been tweaking conditions, how we look at the markets, and there are about 4 moving parts to my method. It is my intellectual property. My program is CPD certified internationally as well. So if you're in one of the industries where, for example, you have to log CPD hours, like, a lot of the lawyers, medicine professionals, like doctors and stuff, they need to have CPD hours. So I sought the CPD certification, and we are CPD certified. So it is not free, and I'm not going to, like, in trading, the only industry where people want to have a methodology that could change their life for free. It's like, I'm not giving that. Like, I went through blood, sweat, and tears to get to my skills, and it's like, I'm a businesswoman. This is not charity. We are in the money business. And if you want to make money with money, well, nobody's going to give that to you for free. I certainly value my time more. And when I first started out naively, I was like, yeah, I'll offer my services for free. Do you know what I got? I got a whole bunch of people who, because I was like, I'll teach you how to trade, and then you just give me, a cut or whatever. Yeah. I got defrauded. So I was like, you know what? I'm sick of that. I'm going to be, like, I'm trying not to swear and stuff, but I was really annoyed at the audacity of people who wasted my time, and they were like, oh, yeah, sure, and then they're like, yeah, by the way, I thank you so much, I made $250,000. And I'm like, good for you, mate, but you wouldn't be there if I hadn't taken your hand and showed you, So after that, I decided that there will be a charge. It's not, I'm not going to charge $250,000, but it costs a couple grand, right? Which you can easily recoup in the very first payout that you do. So it's not like, oh my God, I have to give you an arm and a leg. It's not that expensive, right? But I'm not going to give it away for free, because there are a lot of assholes, let's say, out there on both sides, right? You have terrible instructors who are not very good at teaching, and then you sign up for the course, and they're like, yeah, man, so if you look at me, and then I've got this, and I've got Lambos, and I've got, and you can be like me. And it's like, I don't care about your Lambos, mate. I care about your strategy. They're like, hey, you can be like me. I don't want to be like you. I just want your strategy. A lot of courses like that. Or you sign up, you spend like $6,000 or $15,000 up to $25,000, which is how it used to be. And then they go, this is a candlestick. This is moving average. I'm not going to pay you $25K to find out what a moving average is, but I will pay a couple of grand to find out about how all of these moving parts can be fitted together in a cohesive methodology and raising your situational awareness. So just wanted to put that out there, just in case you're wondering. If you are looking to start, you're not sure about my teaching style and stuff, go on Udemy. I have 3 short courses there. We no longer offer short courses on my main website because I think it just confuses everybody. But you have the 3 courses that are on there. They're only like maybe 5% of the entire pro development program, and those you can get very cheap, right? They're like, what, $10 each? No problem at all. But that's literally just like to find out whether you connect to my teaching style, whether you connect to the methods as well, because I did 3 of them. There's a supply and demand, institutional order flow, there's market profile, and there's also a candlestick workshop, which looks at the probabilities of pure candlestick patterns, not chart patterns. So we're not looking at bats, dragons, mythical and non-mythical creatures. We're actually looking at things like morning and evening star, bearish, bullish engulfing, the success versus failure of hammers intraday, and things like that. So, consolidations with a finisher. So that is, I think, very useful. Because ultimately we are trading the end result of whatever dealers will do. So if you're not familiar with, the strikes and stuff, I don't want to burden you immediately. That comes in module 3 in the Pro Development Program towards the end. And actually, I'm just now preparing a couple more lectures that just going to go a little bit more deep diving into some concepts that are already there. But yeah, it is on there. And yes, I have a course. But it's a very different course. Like I said, I wanted the CPD certification because as a part of that, we have to review the course every year. We have to have a way to answer questions for people. And by the way, for those of you who have been with me in the Market Stalkers community for a while, we actually no longer have bronze, silver plus. The only option is what used to be silver plus. So that's now just a general pro development program. And then you have the personal coaching in case you need some more hand holding. But again, I don't take on many people there. Anyway, yeah. Yeah, exactly. Best DJ in town says, this is the free material you're watching. Welcome. Yes, this is free. This is out there for everybody. There's no paywalls on TopstepTV or anything. So, yeah. The Riddle 37 says, but I don't understand it. Then, what's my student success rate? Well, not even the Market Stalkers, but let me see if I can show you the pass rate. Is it there? Oh, please log me in. Hold on. So the pass rate for the previous VIP, not even the Market Stalkers have a pretty high pass rate because I'm there to answer personal questions. But even me just giving them, bits, bite-sized pieces through the VIP program, through just like a 3-month thing, 73% of people managed to pass the combine. I'm just trying to see if I can log in to this. And I think 40% of them were still in an XFA after the whole program was done. So months later, they're still there. And let me go verify that. Oh, great, it needs an update. I can't log in right now because they use this weird 2auth thing, and sometimes it's a bit temperamental. Okay, maybe. Let's see. But yeah, well, I've shown that before. This might work. Okay. Oh God, how many more? It's like authorization upon authorization upon authorization. It's like crazy. And are we gonna? And no, it's not happening. Okay. No, we won't do it. So yeah, there was a spreadsheet that I showed a while back, but obviously, listen, I can only do so much for you, right? So I can show you the ropes, I can show you the levels, I can tell you what position size you're gonna do, and not to do more than three trades per day, especially in the beginning. Maybe you can expand that to 5 eventually. What do people do? They trade 20 trades a day. They use an inappropriate position sizing, and then they're like, yeah, but I'm still blowing up combines. You're not following instructions. So if you're not going to follow instructions, I can't help. Okay, I'm going to be very straightforward with everybody. But if you come into the program either through the Topstep VIP or you go to my personal one, which is through Market Stalkers Thinkific platform, we have to agree that you will, especially if you come to like one-to-one coaching or something, but if you're somebody who's newer, you've only been trading for less than 2 years, I say no to one-to-one coaching. Why? Because there's nothing I can teach you that's not already in the course, so you don't need to spend extra money in order to to get to raise your skill levels. But once you've set, like I have many market stalkers that have been with me since the inception of my online program in 2019. So that's the first time we released the program. It was the summer of it was February 2019, and actually Coach Ray was one of my first online traders. So he came to me struggling with NQ. He immediately signed up for a gold version. So we worked together, and I literally moved him away from NQ. Within a month, he's passing combines. So it turned out that he's actually a really good trader, but NQ was causing emotional dysregulation. So you remove that, and suddenly it was amazing. But he's one in like 1,000. Most of the time, people have a problem with confidence and problem with situational awareness, where they don't really know what they're looking at. So my program aims to correct that through lectures that are smaller, so you're not being hit with a 4-hour webinar where I'm doing this. So this could be a bit messy for people who don't understand the different moving parts. But we first learn about large time frames. How does supply and demand technically look on large time frames? Where did they move it? How did they move it? How long did we stay away from it? Is there an obvious trend? All of that is module 1, okay? Then you start with module 2, which is when we start to dive into the intraday parts. So you go into market profile. I tell you what a typical trading day looks like. I introduce the concepts of Tom and Jerry chase, which is a fun way to say the sessions like to fade each other. So there are particular points of the day where that is an expected assumption. Then we dive into market profile across 3 different lectures that are a little bit longer than some of the others, but I think they're still like 45 minutes to an hour maybe each. And then we carry on with statistical averages. So that kind of wraps up, and I teach you how to do the setups like failed auction, which nobody talks about. And then when is a failed auction good, and when are the signs that it's going to fail. I teach you about time frame transitions through market profile, how to look at the TPOs and how the auction is progressing. And then finally in level 3, we start to put it all together. We learn about ODA loops. We learn about the gamma exposure levels. We go deeper into the statistical ranges. So it's it's like signing up for a university course, right? Don't expect, and in fact, there is a drip feed lecture system, because I'm not there to just provide information. I want you to obtain a particular result. That's not going to happen if you're watching the course like Netflix, okay? So if that sounds like something you're interested in, maybe check it out, but I'm not going to force anyone with a stick to sign up for it. Chris says, love the name, Market Stalkers. Well, that's where, I was initially called the Wicked Witch. That was that was my nickname and prop. And I'm like, that's not very nice, guys. Like, what? Really? Like, I don't think I'm... And because, I was calling these levels. Because I was calling levels with quite some accuracy, because, I would say things... Like, for example, look at this copper at ADR low, right? This is from my Asia trading. So I would just say somebody shorting into that, and I said, yeah, just be careful about, 91.70, because, it might bounce from there, and then it would bounce, and the guy would just be like, because initially they'd be like, yeah, D, whatever, yeah, you're just calling random levels, cool, because there's nothing structurally there, right? It's like, what? And then I would say that, and I would just get the look. Like, what the hell? And I'm like, I told you it's a statistical extreme. And he was like, yeah, but what? Like, how'd you get that? Like, pull that level out of thin air? Like, what? And I said, no. And then I would explain. So that was how I went into coaching. It wasn't some calculated thing. It's like, I'm going to create a course. It was just like a natural progression as a result of people asking me, how did you find that? And then, you know, over the years, I got better and better. So now we have, yeah, and I've always used options, but I never had a way to show them like this. You know, usually the way the options chains look and the matrices and stuff, they are generally, well, I'll show you. So here's the bar chart, right? So you just have some strikes and you have a whole bunch of things here. And back in the old days, I used to be like, okay, so where's the open interest? So I would go manually through this, filling a spreadsheet and noting down all the levels with higher open interest. Then I will be looking at GEX calculations as well. And let me see, where's the filters? Where's the filters gone? For Greeks and stuff. I don't know where it is. I get this from like a ping. There's somewhere where you can choose the Greeks rather than, but for some reason I'm not seeing that. Anyway, yeah, so I would be looking at pure options chain and, you know, figuring out where the magnet could be. And I just didn't want to put that in the course because that would require a lot of work. Nowadays we have companies such as Mon-Thurs, we have AI tools to help us crunch data. That was never available when I was first creating the course. So, you know, now I need to update the course with 1 or 2 lectures, so nothing major. There's already like, you know, about 30, 40 hours of content in there anyway. And now we're just expanding a little bit on some of the concepts that exist there. At some point, I think I should re-record the first, at least the first thing, because the AI have aged, you know, that I was recording the first one back in 2020, and I still had like crazy red and black hair, and I look much younger, and then I've got a better camera now, so that's changed. So at some point I might do an update to specifically level 1, because level 2 and 3, they were sort of peppered in over the last 2 years, where I redid parts and again raised the content. It's an ever-evolving thing, but we don't change the core concepts. We just explain what people want through that we've seen through like questions and stuff, and that's a part of the CPD certification, that you have to keep improving the course in order to keep the skill levels raised and ideally change somebody's life. So yeah. Dallas says the key to options are their expirations. Well, yes and no. You know, there's a lot to be said for, like, of course the gamma amplifies the closer you get to expiration. Yeah, so the dealer hedging, the closer you are to the expiry, will intensify. So, you know, if you have a strike at 100 and we're there and it's about to expire and we're in positive gamma environment, yeah, you will see a one mofo of a hedge around there, right? But by the same token, implied volatility day to day can provide a lot of clues. It can also tell you where the open interest is changing, what the call put premiums are doing, and it just gives you an overview of where the dealers may hedge. That's what we're doing here. You know, we're using dealer positioning for our own purpose. And then everything else is either a statistical average or a distribution curve, right? So market profile or ADR, ASR, ATR of some sort. I'm obsessed with statistics and averages in general, but also time of day. Time of day has to be absolutely spot on for my trades, because with commodities in particular, there are times of day when certain mechanics plays into the whole price action, and yeah, so I never trade outside of my day trading time zones. So I have an assumption of what should happen, and then at that time of day, whatever level is there, I will trade that. If there's no level, I will not trade. Okay? That's a concept that I refer to as time of day is a level. And you've seen me do that over and over. Joshua says, you still look the same from your first vid. Do I really? I think I've aged. The lights are very forgiving. You know, I can... Because for those of you who don't know, I uploaded my first video on YouTube in 2015. So it's been nearly 10 years. And there I have like crazy purple hair because I was still doing gigs every so often. And I was still maintaining my, you know, my rock and roll personality. And I suppose I'm trying to bring a little bit of that back with like a little shiny blazer and stuff. I do need to get a gold one because I don't have a gold blazer, and when I trade gold, well, we need to wear gold blazers, right? Maybe I'll get like a swanky one with like black lapels and like maybe a Armani or something. I don't know whether they do things that are... Because I want something that's kind of tailored but also fun. So it sounds like stage wear. Hey. Cedric, just go to marcusdorcas.thinkific.com and you will see it. Actually, you know what's easier? Go to my Twitter, and then in my Twitter bio, there's a link tree. So all of the links relating to whatever it is that I'm doing, they're on there, and one of them is the main program. So check it out. That's the easiest way, because I know they put the Twitter on my underneath this video. So go to Twitter, and then Linktree. So Twitter, Linktree, and then you should get, yeah, so there you go. So you get a few things there. I should probably put the Discord on there too. However, that's done through YouTube membership, so that's not for everybody. But yeah, there it is. Second thing. Should make this a little bit more fun. It's a bit gray. So yeah, that is where to find the information. So yeah, apparently Joshua says I look the same. So I don't think I look the same, especially in real life. I can definitely tell I have a few more wrinkles. My eyes are definitely aging faster than the rest of me. But hey, it's not bad for 45, right? I still look reasonably young. May it continue. I feel like shit, but at least I look good. I feel like I'm 100 years old. Cedric says I'm starting to learn Gex since a few weeks. Yeah. Purple hair is the best. I'm glad you like it. I hope you're going to like gray hair, because I'm going to be growing that out in the next 2-3 years. I'm actually really excited to see what my natural graying pattern is going to be. I've been getting obsessed with like younger women, meaning not 60, not 70, growing out gray hair. And, you know, I'm 45, not exactly super young, but I think it's time. I'm sick and tired of dyeing my hair, and I just want to see what the nature has given me when it comes to gray locks. And it's in now, isn't it? I've seen it on TikTok. Granny D has seen it on TikTok. The gray hair is in. Yeah, so Joshua says, you look the same. You can tell, you can just tell you're older because you sound more mature. Yeah, thank you. Yeah. All right, so let's have a look at some developments. Still a similar outlook. So we have corporate still below that major core wall and the gamma flip area. We have VWAP, tagging VWAP and not being very successful in going above it. It's not reclaiming it. This could be a short. It could be a short. Should we maybe try the other XFA? But it's going to have to be a micro in the other one. What's the volume doing? Hold on. Because this one's locked out, but I have a 50K XFA that we can do. Volume is falling off. That's not ideal. again, I can't wait until we actually change the time of this, because as soon as I finish the stream, it's that like pre-market LME and everything starts lining it up, and I'm like, damn it. So yeah, for those of you who are new here, these live streams were supposed to be DAX trading, but then they had problems integrating it into the platform, so Eurex products never came, and then Dee became stuck trying to trade the metals at a time of day when she's never traded the metals. The London Open. And DAX is still great for this time of day, and you know, someday over the rainbow, we might actually get Topstep and Eurex products, but for now, they're still not there. So therefore, we have to be a little bit more patient with metals until we're closer. And every time I'm thinking, ooh, a setup, and I look at volume and I go, okay then. It doesn't know. Wow, Keith says I'm 67. I have every one of my gray hairs. See, this is the thing with men. You guys are called silver foxes when you are like growing out your gray hair. I think it's really unfair, because I've met some women who have natural gray hair. It's some of the most stunning hair that I've ever seen, and yet they're like, it's aging you. It's like, who cares? So it's aging me. I'm gonna look my age, or boo-hoo, you know. Like, whatever. All right, so we're gonna have to hold on that copper trade because the volume is just not there to support it. Still a possibility though. So when we get close to LME, we could tag 6 evens as well. And we could even reclaim it. If we reclaim it, the next stopping point is 605, with 610 being kind of like the absolute high of the perceivable range, also where the Asia high was, not too far. But the core wall still remains 610. None of that has changed since yesterday. I think we had a core wall higher up yesterday at 615, and that one worked. But yeah, non-committal London. They're like, we're just gonna go have breakfast and, you know, full English whilst you guys are trying to trade this. But the dealers are nowhere to be seen. I suppose silver is moving a bit. But this is just because of implied volatility being so high. Like any movement is going to be super exaggerated. If we do end up in a range, it's going to be a range of like 1 million ticks. So this one is already 500 ticks movement, and it doesn't even look that big, right? It's like everything's scaled down to the additional extreme volatility. So be very careful trading silver today. You cannot go lower than a silver micro. And if one single ATR is telling you that it's like almost 200, like 175 movement during a slow time of day, it's going to be crazy for COMEX today. So be very careful what you're doing. Whether it's positive or negative gamma, at this point, it really doesn't matter because of the implied volatility being so high. But same remains. 90 is your orientation point. And if you want something less crazy to use as a benchmark, gold is your baby today, because gold is still sitting at like 32%, and that hasn't moved. But look at 4,600. If you're still above it, and if the price cannot tackle it, and we're kind of crawling above 4,600, which is a gamma flip, and then crawling above 4,625, yeah, maybe there's a zombie rally there to be had, even on gold. But the main takeaway would be that we're in positive gamma at that point, and either smoother rallies or mean reverting moves as you're hitting some of these bigger open interest levels. Dealers will hedge there. By how much against the trend, that's anyone's guess. However, if we bleed back below 4,600, you should see silver below 90, and then in effect copper will be showing you the real sentiment, because it's the only one that's below its gamma flip, and it is a negative gamma out of all of these three. So hopefully that is a little clearer. Joe says, what is the logic behind the short for copper as it's in the middle of the range? VWAP and the fact, so VWAP is volume based, right? And the fact that we have gone into a very confident new lower low, so we're making strides to the downside, and we're below 6 evens, which I've been banging on about for a while. So negative gamma environment can cause amplification of the moves through the open interest strikes rather than a hedge. So that's what the dealers do. So Joe, there is a lecture, because I know you were on the program, there is a lecture in level 3 that maybe you didn't realize is there, but it is new, so I placed it there this year. You may want to watch that, and I'm going to have another one with a bit more of a deeper dive, but I'm just finishing that up. I still need to edit it and then put it up there. But the gamma lecture is as its basics, as the basic concept is already in level 3, so check that out. Things might be a little clearer. Do you see that guy on like Instagram? He's like, did you edit it? I edited it. I didn't edit it. I didn't. You didn't edit it? I didn't edit it. And then he makes a little kind of like dance song. I didn't edit it. You didn't edit it? I didn't edit it. You didn't edit it? Anyways, sorry about that. Yeah, okay, Joe. So yeah, just beware that, you know, I do sometimes add things, and that will be in the community section as well. I will say, and I will also say it on Twitter. But yeah, I uploaded that ages ago. And then I said it in the community. A new lecture on gamma levels is up in level 3, and then snapshot where it is. So yeah, just because you know, once you are in the pro dev, the way it is set up now, it's only people who used to be silver plus and or gold, and both of those now come with lifetime access. So you will have updates every so often, and it's not like we do updates every day. It's literally just once every couple of years. We're like, okay, let's add 2 or 3 more lectures here just to deepen, because you know, over time people ask questions, and I'm like, maybe that needs a separate tackle. You know, you need to actually get the information out of the original lecture and just do like a more of a deep dive. So that's why we kind of sometimes either modify the existing lecture, so you know, you replace it with new content that has extra detail and answers to students' questions, or you just make a brand new one. So which one of those, it's a matter of how deep the questions are. And recently we've been getting a ton of questions about gamma and how I use it. And now, like I said, that we have all these tools, we have MentorQ, we have AIs, we have all these other things. It is time to add a bit more depth to that. And then some people have been asking me about tape, so that's going to be in there as well. Bookmap, reading tape via bookmap. Again, not something that everybody should be looking at, and it's going to have brackets optional in there, because not everybody should be looking at tape. You know, if you're basing your decisions off of the post-result of dealer hedging, you will have a 5-minute or 15-minute and a 30-minute candlestick and the TPO profile telling you the same outcome of whatever the order flow is done. It's just that with me, I'm old school. I was used to looking at tape in the dome and everything. In fact, I always trade through the dome. I very rarely use an actual chart to execute an order. And that's always been the case, right? Ever since I stepped into a prop firm in 2013. And I traded on the charts for like 5 years prior to that. But then as soon as I went prop, I went dome and order flows. So there is a way to figure out whether there is any absorption, whether they are starting an early hedge. And then you can see sometimes the delta divergences and the cumulative volume delta, but all of that is just another layer that might come in handy once you've been at this for like 7 years or so. But if you're doing the market stalkers method, where you're aiming for medium 2R multiples and kind of trading slower, which is the whole idea, so being selective, finding 1 to 3 setups per day, using the appropriately sized stops and appropriately sized positions, and then just going day by day to increase your skills, then you don't necessarily need tape, right? But if you're at a point where you've been at this for like 5-6 years, and you're like, you know what, I've seen this setup happen a million times, I wonder if I can catch something on the tape. Just to see whether, to see whether I can catch it as a earlier entry, earlier reversal. And it's not necessary, but I'm trying to be as good at executions as possible. And tape reading was just like a natural progression for me. But tape was difficult for me, man. It was difficult. Like, yes, I used the dome a lot. But I tried looking at time and sales, and I was just like, I have no idea what we're looking at here. It's like, what? And then Bookmap came along. And suddenly all of those puzzle pieces that I was learning about initially through the painful time and sales, or cancerous time and sales, as I like to say, suddenly all fit together. And I'm like, oh, that's what it looks like. It's like I knew about sweeps. I knew that it was like you get to Asia high and then you bust through the Asia high and they reverse. How does that look on tape? And how does the impending follow through and a pullback look? That's it's an interesting one. And then you sort of match that, and then things become a little clearer. But it's a progression, it's not going to happen overnight. There are steps to take way before you get to that point. And there's emotional regulation, mindset changes, habit modification, behavior modification that you must go through before you get to the next step. It's kind of like in a video game, right? So when you first start playing a video game, you're not there with all the skills and all the cool tools and gadgets and whatever you gain through experience of playing the game and unlocking things. It's the same in trading, right? So from that respect, it can be a little bit gamified. And if you go, well, which level am I? Which paladin level am I right now? And, somebody who's been trading for 6 months, they will be a paladin level 0, right? They don't have any cool tools. Or, right now I'm playing Satisfactory. And it's like a big, kind of similar to Minecraft, and it's amazing. But you're on a foreign planet. And you have all these weird aliens talking to you every time you pick up one of their items. But you also get to go through progressions of unlocking gadgets, right? So you start off with nothing. You start off with a crafting bench and just digging for iron ore and stuff manually. And then eventually you get a portable miner. And then eventually you get the Mark 1 of the mining facility, which needs power. So then you have power. Same thing with trading, right? So you first use larger time frames to see whether there's any sentiment there. You drop down to lower time frames and everything looks impossible. You're like, what is this? And then you try and catch momentum moves without knowing what a momentum is or where you are in a chart location. So then you realize that you have a hole in your experience. Then you go through something like, for example, support resistance. Okay, so now I have support resistance. But then the support resistance gets overshot. Then you get stopped out because your stop loss is in the wrong place. Because most people will be placing stops. Like, let's say this is your Asia high. And then they place stops like this, and they try and catch things on a tiny little stop. So then when you have a bigger run through, because implied volatility is so high, your stop is not going to survive for a nanosecond. It's just going to be like, we're in, we're out. Huh? Where's my trade? It's like, your stop was too small. So then you go, how do I adjust my stops? So then you grow to the next level, next tier, right? You're like, okay, so maybe I can't do stops that are that small, and maybe I shouldn't be catching 10R. Maybe I'll increase the stop and see whether it gives me time to actually react. But maybe I go for something like 1.5R or 2R just to kind of test that hypothesis of, and then it's like you learn. So what had happened with Asia high? So you try a short at Asia high with your stop at a terrible place, get stopped out. But generally the idea is right, okay? So this is why I don't like people focusing on the P&L or the actual outcome of the trades for the validity of their hypothesis in diagnosing a chart, because the execution is a whole different animal, right? You can have a perfectly good idea, but you're either wicked out or you close it early, like whatever the reason is, and you're not able to take advantage of it. So the top of the game is when you can match those two. You diagnose the chart correctly, let's say a smash above Asia high and a reversal, you're using an appropriate stop, and you're able to stay in your trade long enough for whatever reason to gain a moderately positive risk reward, which I teach as 2R. Very rarely will I say to people, yes, let's do a home run. First, you start with 2R. Later on, when you understand the whole dynamics of how the dealers are hedging and when is the time to extend your targets, that's like a whole another layer. So that's another tier of skill. But for the time being, you identify setup, you go for 2R, you try not to be, messing with the stops too much. You just put it in. Don't overmanage. Don't over-optimize, because over-optimization of trades, when you don't know what the trade is supposed to do or how it should look, that's an account killer. Most of you do that. I've seen it in the VIP, okay? Most of you do that. So you will be like in a perfectly good position. They're like, oh, I got out for 10 ticks. Why did you close the trade? Oh, I thought, think less. You were in a trade, leave it the F alone. Let the trade do its thing. Commit to the risk. And it never ceases to surprise me. Never ceases to surprise me that we're risk takers. And yet most retail traders spend all of their effort to completely remove risk and pain. I don't get that. I commit to the trades. Yes, sometimes if I'm already up on the day, I will trail my stop. Because I'm like, you know what, I don't care now. It's like, I don't need to be in this and I've already got a little bit of profit. Let's just put a trail on it and leave it. But if I'm just beginning the day, I will commit to the bloody risk, man. Okay? I will commit to the risk. And I don't mind losing if I'm outright wrong. But also my stops are designed to be away from the round numbers. So typically my stops, if let's say I'm going to trade a wick above the Asia high, where's the next round number? It's 94. So in order for my stop to be pretty strong, I have to be quite far away from that round number for my stop loss. Okay? And if my stop loss is here, yeah, that's not going to survive. Okay? And I'm aware of that. But if the stop is appropriately sized at a decent area, you then have a strong position that is using dealer hedging and liquidity sweeps to your advantage. Okay? But that's a tier, that's like a skill tier. So until you get there, know where your tier is, in other words, know where your weaknesses are. What's your weakness? Is it strategy? Is it the emotional regulation side of things? Because a lot of people struggle with both, right? They don't have a good strategy, or they're fumbling with strategy. Maybe the strategy is excellent, but I had somebody who, for example, did the following. They're like, well, I have a great strategy. And I'm like, good. So I tried a couple of times around the same level. Does the strategy call for multiple attempts at the same level? Well, no. So you are modifying the strategy. No, I just tried twice. Yeah, that's modifying the strategy, because the original strategy doesn't say go in on 10 ticks. The original strategy says go in on 60 ticks and hold the trade. But I didn't want to lose 60 ticks. So then you lost 10, and then another 10, and then another 10, and then times 100. So now you're losing more and losing your mind, because you see that you might be right, and the trade may work at some point, but you're not giving it enough time. Why? Because you're skimping on stops. So don't do that. So, anything, look at every piece of a trade and everything as a one variable. How many variables are you messing with? So, to begin with, you have what? You have a level, you have an entry, you have your stop, you have your target. Okay? Just 4 parameters. But no, people start changing the stop size. People start multiple entries. Then they change the target because they're like, I'm not sure. Yeah, just leave it alone. Then you'll find out whether you're sure over the data that you collate and aggregate for the next 2 months. Oh, but I want to be in a funded account. Awesome. Have you ever held an XFA past a week? Yeah, once I held it for 2 weeks. Oh, slow clap. Great job there. It's like, no, you need to stay in one account, or the same 5 accounts if you're copy trading, for extended, like a month, 2 months. That's when the sample size becomes meaningful. Time is the only judge, okay? So it's like, and then selectivity over levels. You know, they're like, well, I have Asia high as my level of interest, but I'm just going to try and trade up to it. Why? Well, because it's going up. Yeah, that's not the kind of game we're playing, though. It's going up, I must get in. That is not the name of the game. The name of the game is wait for level, wait for price action or order flow to show you the way, and then run the trade. This is why I get really criticized. Like, Dee, you're not trading enough. Based on whose assessment? A random person in chat? No, I'm trading enough, thank you. Because I don't need to trade 1 million trades to make money. I trade 3 to 5 on most days. Sometimes just 1. Go figure. Just 1. That's all you need. And on some days, if it's a range day, yeah, I will trade up to 20 trades. Why? Because there's nothing else. So you're pinging the range, right? So situational awareness. But yeah. So think about all of that. Think about all of that. Miss Tiny Trader, so I love your name. That's what I really need to work on, is holding winners. I can cut losses decently, but still like the quick buck in oil. Listen, quick buck in oil is great. I don't have a problem with that. You know, you get to a level of interest, and then crude oil does one of the jumps off a cliff. You don't have to be in like for a long time if the price is already reaching targets, right? So here we go. We have the gamma pinning ahead of the expiry. So the hedging is intensifying. It's exactly what we have in crude oil. 62 was the number. And now we're just like, smash. So should you hold more? You don't need to, because you've already got, you already got 200 ticks. Like, how much more do you want? So time is not necessarily the definition of like, oh yeah, I have to hold my winners. This is a great winner. This is a swing winner, even though it happened in a single 30-minute time frame. Doesn't matter, right? But you still grab 238 ticks or thereabouts. Nothing wrong with that. You don't have to hold it for hours. The only time I will hold for hours is if I manage to identify something on a very large time frame, let's say after a decent pullback, and then we hit a GEX level or something and we start to rise back from it. And it's a little slower, but I can see that the entire range is up for grabs because maybe we have, maybe we're under the gamma flip, so we're in negative gamma going towards it. That could be, one option. But if the market gives me quicker profits and it's still a swing, my job is done. We don't get paid for time. We get paid for the number of ticks we grab, and we get paid to be correct on a direction at a particular time of day. But nobody's going to pay you extra money because you're sitting in front of the charts for 12 hours and losing your mind. Be kind to yourself. Trade less, make more. Not the opposite way around. And I know it looks great. It's great TV to see people clicking buttons all the time. I know that me talking here, people are like, oh, is he talking again? It's like, yeah. But at the same time, I'm sitting on a profit of 2.4K in one single 20-minute trade across 3 instruments that are correlated. Because I didn't know which one is going to move. So I'm like, I'm just going to spread the entire risk, which is 3 lots, across 3. And then I got my targets literally within, I don't even know whether it was 20 minutes, but it was still a swing, right? I still caught a decent amount of ticks on the day. Kelvin, good morning, good morning. Yes. So if you're in a long, what will your target be? Asia high. Well, no, that's a little bit, like, depends where you went in. If you went in around 90, that's not a strong enough area because it's middle of the range to shoot for the entirety of Asia high. So the first level of problem, let me just refer to my my levels. First problematic level is actually 92. So that would be my target. And then nothing really until 95, but 92 will be my first one. 93.77 is Asia high. In such a bullish environment, there is a possibility for a hedge. But what could happen is that they just hedge it a little bit and then they pull back over Asia high. So in my eyes at the moment, we're not quite close enough to expiry to expect really big dealer hedging, and this is now positive gamma environment, right? So how much of a hedge would I want to see at 92? A decent amount. But is there enough open interest? Not really. It's at the moment, when I took the last snapshot, there's only about 250 open interest there. So it's like a medium to weak area, but it could pose a problem. So the safe thing would be to grab your profits at 92 and not chase the extended target at 93. Not to say that it won't happen, because it is an uptrend, but what could also happen is that this is just an overshoot, and the reason why I'm saying that is because we still have gold and copper not exactly screaming to the upside. It's all like inside bar upon inside bar upon inside bar. A little bit of a pump now, coming into a GEX3 level on gold. That's from yesterday, but it's probably still a relevant level. Yeah. So 46.25 was my looser area of interest for targets on gold. Didn't really get there until much later. And then we had a ping from the average daily range high, which I posted on my Twitter. I think it's the final thing that I posted. Or did I post Rim or Bear as well? I posted a little random shit on Twitter, I'll be honest. And then the ADR high was somewhere there. Actually, we can probably go back in my other platform. So let's go back in time. London, let's put the ADRs on here. Okay, COMEX begins. Where's the ADRs? What's going on? Hold on, I seem to have lost my ADR. I don't see the 24-hour ADR. Why is that? What happened? Let me just try something here. Get rid of some stuff. Yeah, do you see it? Oh no, sorry, it was in silver. Oh god, yeah. There we go, that's that aging brain again. It was silver. Silver. Silver, here we go. Yes. I was like, what's it called? Here we go. So, London eventually went up, but here's that quiet period of the day. I'm using Blatek backtest mode, right? This is our proprietary piece of software that doesn't erase candles, but shows you all the snapshot of levels as they were. So we overshot London average session high as soon as COMEX and London Fix started happening. So I think this was London Fix. Yeah, so here's London Fix. They actually used it to run it further. Hits ADR, exhausted by like a couple of ticks. And then what does it do? Straight down to VWAP. And then again, comes back up to ADR. And then again, then finally makes a move. Goes all the way to average session range high into a neutral day type. Extensions of the initial bounce both sides. And then it slows down and ends the day there. Sure, it chops around, and then Asia opens, and then again, so yeah, so it was a great day. So, you know, it was a quieter day, but very much welcome. Aaron Horton says, "Love your trading, Deeyana. Thank you." So yeah, 92 would be my first area of interest. Another thing to keep in mind is that as we are talking, we do have the complete rotation to the opposite side. So now, is this an outlier or not? But 92 is definitely a pain point. It could be an extended target. We also have some supplies up there. Probably not on this time frame though. So look at 4 hours. Yeah, so you have a supply at 92 exactly. So, you know, I would, yeah, and it could go up because in an uptrend, all supplies will be broken. But there is a good chance of the market stopping there and smacking it back down. Smacking it. But yeah, so 90 remains an orientation point. But because it's in the middle of the range, we have to look a little bit past that. Now, if we do get to Asia high, yeah, a little bit of a pullback is possible, but that's going to be more of a scalpy scalp, you know, because it's so bullish. I just don't want to be the hero to go, I picked the top on silver. So I would prefer to wait for a big reversal and then confirm it by the price kind of bleeding through some of the levels that will be relevant at that time of day, and then going, okay, yeah, they're back in the range. Let's catch a piece of the pie sort of in the middle, maybe towards the call wall again, and then use this one as an orientation to maybe extend it back down and try and go all the way down here if we end up in negative gamma. But if we don't, then it's gonna probably just stop somewhere, and of course there's the third option that we don't move, because obviously silver moves a lot during Asia, but we could get stuck in a nothing day. Like, do we have anything release wise? We have unemployment claims, that could be a mover. But then we had PPI yesterday, and that wasn't much of a mover, so, you know, yeah. But again, I would wait until the unemployment claims are out of the way, and then maybe look at that post and white cut, post 9 a.m. Central, post 10 a.m. Central, and see whether there's maybe a reversal of some sort. Whether long or short, it will depend what the price does in the run up to that time of day, and then to see which one of these levels are going to come into play. That's kind of how I do it. Time of day, what level do we have? What assumption do I have at the level, if any? So if that leads to a binary decision thinking process of yes trade versus no trade, so be it. If you want to go long on silver, what would be the ideal location? No, not on VWAP. I would like to see a retest of at least ADR, maybe even 87, where they bounce from. VWAP is too high up and too close to the gamma flip. So if we're below VWAP, if we're touching VWAP but we're below the call wall because we weren't able to hold above it, that then brings the negative gamma into consideration, and then longing there would be very dangerous. So longing here would be safer, but again, be careful because it's negative gamma at that point. To me, a safer option would be just to wait it out and see what happens. This is too late for longs and too early for shorts, so it's a crappy trade location, however you spin it. And it's just not, like, structurally, it's not a good area. If we were above Asia high and VWAP was also pulling up, I would be like, yeah, let's do a long from VWAP, but not whilst we're still inside the Asia range. So Asia range brings price discovery, and especially in metals, and Joe, you trade silver. So if we're still inside the Asia high and low, those are your points of interest as the extremes, or at the very least being somewhere close to it. And then if we go above that, you can then use VWAP to run an extension trade towards some higher levels. If we're still inside Asia range, it's like, yeah, let's wait. So Asia kind of gives you the waypoint for silver, copper, and gold, and how you should orient yourself on the day. But trading in the middle of the Asia range, it's 50-50. There's no asymmetry there. You want to look for asymmetry. And asymmetry would be if, like I said, we go outside of the Asia range, that's asymmetrical already. So you can use VWAP as a trending bounce tool, but not here. So context, as always, is king. Sure, Joe, no problem. CL changed to March contract today. Okay, it's a bit early. I see, yeah. So I need to adjust our levels in Discord as well. Okay, I'll get on that before the stream, after the stream. Before the stream? After. But yeah, so usually they change around the 17th, they roll, but they rolled a little earlier, which is fine. And that means I've got some work to do. All right, so we're getting close to 11 a.m., so we got 7 more minutes. But I mean, there's nothing much else to say. I'm not going to find a trade here because the locations are not right. Sitting up on the day, that's very nice. I may come back for like the end of the day towards COMEX close and see what we have around that time. But yeah, you've got the levels, and now it's up to you to stay cool, calm, collected, and try to get a couple trades out of it. Just not 100, right? So stay selective, stay collected, and profits will follow. Why? Because they are always a result, side effect, if you will, of good trading habits. I would like to say that it's not always the case, but unfortunately, if you bring time into consideration, luck and winging it and just gambling away, that doesn't bring longevity. So what I'm trying to do is impart my experience on longevity and how you get there. And you just don't get there by full porting. You don't get there by trading the news and doing open positions right into the news when the liquidity is nowhere to be seen. You don't do it by not waiting for your levels. If you have trouble waiting for levels, place an alert and walk away. Most of you will have TradingView subscriptions. Open up the app. It will send you the notification to your phone. Okay, it's not that complicated. And then do everything in your power to stay away from the charts until your level is there. Okay? And I actually have time of days, so I will have an alert, but if the alert hits outside of my day trading time zone, I won't even look at it because I'm like, it's the wrong time of day. What are you doing? And markets can be a little irrational, so you have to apply your own rules in a chaotic environment, because it is a bit chaotic, but there is definite mechanistic nature of dealer hedging in existence that is very, very predictable. And once you understand the auction process, statistical averages, gamma conditions, suddenly there's this whole other world where you're not confused and you're not afraid, and you're like, even if I'm wrong, like I can see why I was wrong. You can rationalize it and explain it. So therefore the markets are not this like big bogeyman, enter Sandman kind of moment. They're like just, beautiful. And it becomes easier on your heart, easier on your fight or flight response, and you no longer have to react to bad decisions or unexpected events, because they will never be unexpected, right? Yes, anything can happen, but if you can rationalize it, like let's say we get some massive move down. Would I be surprised? No, because if we go below 90, that's negative gamma. What do I have on the downside? I have 85, followed by 82, followed by 80. So I'm prepared. I'm not like, oh, what happened? I'm like, okay, so we're going down then. How can I catch this? And then if you get smacked on the face because your execution is not right, you still know what happened. And then you go, is there another way I could have done this? Is there maybe initial balance low here? Was there a failed auction? Was there, a single print? Was there rejection of value? Was there anything that I can use as, like, just situationally at that point of when I was executing a trade that could have been done better? And then it just becomes an exercise in catching your weakness, getting a little bit better, tweaking it over time, and then just keep going. It doesn't mean you won't have bad days. You probably still every once in a while malfunction, because that's just how humans are. But once you catch yourself doing that a couple of times, I'm like, I saw that. I did see that, right? Shouldn't have done that. Let's try not to repeat that tomorrow. But you don't go flogging yourself for making a mistake, right? You don't go, oh, I'm going to get somebody to beat me. Like yesterday somebody said that, oh yeah, before I trade I have a friend come and beat the crap out of me and then I'm alright with the fight or flight. It's like, I know it was a joke, but that's not, like, if you want to beat yourself up in any way, just go do some weightlifting, because that'll do it. You will be exhausted. Your glycogen reserves will not be high enough in order to kick off the fight or flight, which is the fuel for fight or flight, so get rid of that. You will still feel some emotion, but it will be a lot less. So if that's what you're struggling with, that's the only beating up of yourself that you should be doing. Exercise. I know it's not what you want to hear. Lark Skies says, just got here. What did you trade today? So I showed this earlier. So I had the same idea for Asia. And I didn't know which one of these three is going to move. So I did 3 shorts on the same idea because gold opened up below value. So I did, instead of 2 or 3 contracts on one product, I did 1 contract on 3 products based on the same idea, and then I got pretty decently quick move. I wasn't in this for very long, so smash, 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 copper, silver, gold. That's my day, right? Asia has been beautiful to trade, so that's where I'm going to be. We'll see whether we get anything else, but right now I'm still locked out for another hour. Unfortunately, I do have to get to a doctor's appointment later, so I won't be able to trade like the London fix and all that. But yeah, so all in all, decent start to the day, and maybe even the end of the day. We'll see. I don't need to trade anymore. 2.4k is more than enough for me, especially on one account. Alright guys, that's it for today. Have fun. Let's see what the unemployment claims, or unemployment clams, as Hogue likes to call them, bring us in regards to volatility. Stay on your toes, don't overtrade. If you get smacked in the face, don't go into another trade. Let that be your homework. Not doing a reactive revenge trade as soon as you lose. Just go, deep breath, and breathe out. And then you go, alright, what levels do I have left now? And how are they playing this? So don't chase big candles. That's not the point of trading. If a big candle smacks you in the face, give it time. And that will serve you better than going reactionary into yet another trade. Okay, so let's work on that. That's it for me for the Euro trade. You will see me on group coaching tomorrow for the main broadcast. So Friday, group coaching. I will see you there. This was the Euro trade. This is TopstepTV. I'm Marcus Tucker D, and I will see you very soon. Take care.